Hello students, this is Mrs. Jennifer Cruz from Lilavati, Lalji, Dayal, College of Commerce. And in today's class, students, we are going to study economics, chapter number 7, national income. So before starting with this interesting chapter, students, let me tell you all that the total weightage of this chapter is 12 marks with option and 8 marks without option. So let's begin with this interesting chapter. So students, let us first understand the meaning of national income. So the total income of the nation is called as the national income. Okay, in real terms, the national income is the flow of goods and services produced in an economy during a year. Okay, so in simple terms, students, national income means the total number of goods and services produced in an economy during one financial year. Okay, let's move on to the first important answer of this chapter, and that speaks about features of national income. Okay, so to remember this answer, students, you have a code word MBNF. Okay, M square B N square F square. Okay, so MBNF. So M stands for macroeconomic concept. Okay, so here, students, the national income, it refers to the nation's total income rather than the single individual's income. Okay, so here it speaks about the macroeconomic concept. Second one is the money value. Okay, so national income is always expressed in monetary terms. Next one, students, the value of only final goods and services. So here, students, to avoid double counting, okay, only the value of final goods and services are considered. Next one is net aggregate value. Okay, so in the national income, students, the calculation of depreciation, okay, all these things are excluded. Only the net calculation, net aggregate value is taken. Next one is net income from abroad. Okay, so here, students, in the national income, the calculation of the national income, okay, it considers a difference between the export and the import. Okay, and the difference between receipts and payment made abroad. Okay, next one is financial year. So here, students, it is, in India, the financial year is considered from 1st April to 31st March. So for the calculation of national income, we always consider the financial year. Next one is a flow concept. Okay, so national income, students, it shows the flow of goods and services in the country. Okay, so with this, we've completed the first answer, that is features of national income. So herein we have the code word M2. M2 stands for macroeconomic concept, money value. V stands for value of only final goods and services. N2 stands for net aggregate value, net income from abroad. F2 stands for financial year and flow concept. Okay. Now let us move on to the next answer of this chapter, and that speaks about the circular flow of national income. Okay. Now what do we understand by the circular flow of national income? So the circular flow of national income refers to the process whereby an economy's money receipts and payment flow in a circular manner continuously through time. Okay, so for example, your students in this diagram, we will study the two economy, that is the economy, two sector economy, that is the household and the firm. So what happens here, students? The factors of production, okay, so the factors of production that are there, okay, in the firm, okay, it flows from the household to the firm. Okay, the firm then uses these goods, okay, and then what does the firm do? It uses the factors of production and then it produces goods and services required by the household. Okay, thus the goods, what is happening? The goods from the household is flowing to the firm and then again it is flowing back to the household. So this flow, students, is called as the product flow. Okay, so from the household it is flowing to the firm, from the firm again it is flowing to the household. That is termed as the product flow. Okay. Now, in the same way, what is happening here? Money flows, okay, from the firm to the household in the forms of factors of production. You can see this, the factors of production that are there. Okay. It can be the rent, okay, wages, interest, profit. So from the firm, again, it is flowing to the household. Okay. What will the household doing? The household is using this income to produce goods and services. Okay. Thus, money is flowing from the firm to the household and from the household to the firm. So this concept is termed as the money flow concept. Okay. It is termed as the money flow concept. Then students, what is happening? So in this circular flow of income, production generates, okay, factor income, which is converted into expenditure. Okay. The income is converted into expenditure, and this flow of income continues, okay, as production is a continuous activity. It will continue again and again, and you know, as human wants are never ending, so this income will continue again and again, and this flow will continue, and thus it is termed as the circular flow of income, wherein the firm is giving back to the household, household is giving back to the firm again. Let's move on to the there's a short explanation. So it speaks about two-sector economy, which we just now saw, the household and the business firm. And three-sector, students, is nothing but household, business firm, and the government will come in. And in the four-sector economy, household, business firm, government, plus the foreign sector will come in. So there are four sectors, 2, 3, 4 in macroeconomics. 2 is only household and firm. 3 is household, firm, and the government. And the fourth one is household, firm, government, and the foreign sector. Now, let's study the different concepts of national income. Okay, so first one is GDP. What is GDP? Gross domestic product. Okay, so your students, the goods and services are produced in India only. Your depreciation is not deducted. Second, for net domestic product, NDP, okay, your goods and services again are produced in India only, but your depreciation is deducted from the national income. Then you have GNP, gross national product. Okay, now goods and services are produced in India along with receipts and payment from abroad. Okay, so they are produced in India, but the receipts and payment are from abroad, and again depreciation is not deducted. The last one is net national product, NNP. The goods and services are produced in India, okay, along with receipts and payment in abroad, but your depreciation is deducted. Okay, so herein we have the four concepts: GDP, gross domestic product; NDP, net domestic product; GNP, gross national product; and the last one, NNP, net national product. Let's move on to the next slide, students. That is methods of measuring of the national income. So there are three methods, students, of measuring national income. First one is the output method, which is also termed as product method. What happens here? Only, okay, the value of the final goods are produced, okay. Only the value of the final goods are considered, basically, okay. That time, okay, they are termed as final goods approach or value added approach. Okay, so output method mein only the value of final goods produced is considered. Second one is income method. Okay, it is also known as the factor cost method. Okay, why factor cost? Because in this method, rent, wages, interest, profit, okay, behind producing of goods and services is considered. So all the factors, you know, of production are considered in this. That is termed as your income method. Third one, students, is expenditure method. What is happening in expenditure method? Here, it is also known as the, you know, total outlay method. All the expenditure, okay, is considered in the total outlay method. So three methods: output, income, and expenditure method. Now, let's move on to the next answer that speaks about theoretical difficulties or conceptual difficulties. Okay, so when you measure national income, so you have theoretical difficulties. Let's see what difficulties come in. So first, now you're in to remember this answer. You have a code word ICU. TVP. Okay, now ICU. So there are I squared, two I's. So here in students, the first point, the income of foreign firm. What is happening? So your income, it needs to be considered, okay, as the income of the nation. Now, based on the location where the goods are produced, okay. Thus, income generated from abroad, okay, it needs to be avoided. So the first problem is income of foreign firms. Income from abroad needs to be avoided. Second one is illegal income. Okay, so income that is coming in from gambling, black marketing, etc., are not considered while calculating the national income. Third one, changing price level. Okay, so changes, students, in the price level of the commodity makes calculation of national income a bit difficult. Okay. Next one is unpaid services. So services, okay, of housewives, okay, of charity firms, etc., are not considered while calculating the national income. Next one, you have transfer payments. Okay, so pension, like transfer payments includes pension, unemployment, etc. Okay, they are treated as income of individual, and on the other hand as an expenditure for the government. So transfer payments is avoided. Next one, valuation of government services. Okay, so your valuation of government services becomes very difficult. For example, defense services there, health services there, it becomes really difficult. Next one is production for self-consumption. Now, your in students, production for self-consumption is never included in the calculation of national income. So these are the theoretical difficulties for measuring the national income. So it is ICU, TVP, I is income of foreign firm, I illegal firm, C changing price level, U unpaid services, T transfer payment, then you have B valuation of government services, you have P production of self-consumption. Let's move on to the practical difficulties or statistical difficulties in measuring the national income. So here again, students, you have a code word that says it's IDPVCE. Okay, so it's IDPVCE. So the first one, students, I stands for inadequate and unreliable data. Okay, so here students, the correct data of national income is not considered, okay, from the rural sector. You always have an inadequate and unreliable data. Next one is illiteracy and ignorance. Okay, so your students, illiteracy and ignorance by the small scale producers makes it really very difficult to get the actual data for the national income calculation. Third one is difficulty in the classification of working population. Okay, so for example, farmers who change their profession every 6 months. Okay, some will be doing a particular work, then after 6 months they practice something else. So when it becomes really very difficult during the classification of working population because of the changing profession every time. Next one, students, is depreciation. So it is really difficult to get, a standard form of depreciation method. So depreciation also keeps on changing. So herein the depreciation amount differs for all the firm. Next one, you have problem of double counting. Okay, so the final product of one individual is the raw material for the other. Okay, so here it always leads to the problem of double counting. Next, you have valuation of inventories. Okay, so raw material, the semi-finished goods that are there, okay, they are called as the inventories. Hence, this leads to the problem of calculating, okay, the actual value of the inventories. Next, C stands for capital gain or losses. So here in students, the capital gains and losses are always ignored in the valuation of national income. Next, you have existence of non-monetized sector. So in rural areas, students, okay, the barter system still prevails. Okay, it takes place when the goods are produced. Okay, they are not when the goods are exchanged. Okay, but when they use the barter system, okay, that time they do not consider it while calculating the national income. Okay, so when non-monetized sector comes in, so calculation of national income really becomes very difficult. Okay, so with this we've completed the practical difficulties of measuring the national income, and let's have a quick recap over the points, students. So first we have inadequate and unreliable data. Second, illiteracy and ignorance. Third, difficulties in the classification of working capital. And next, you have depreciation, problem of double counting, valuation of inventories, capital gains or losses. And the last one is existence of non-monetized sector. Okay. So with this, students, we've completed the chapter National Income. Thank you.